you very much, Jen, and thanks for the warm introduction. Hi, everybody. It's nice. I was going to say it's nice to see you all, but it's nice that you can all jump on and join with us here today. We have an extremely riveting subject, which is our bookkeeping essentials. I was telling everybody earlier we should have put this up on Friday evening because this is how I'd like to certainly spend my Fridays and maybe even the weekends. But here we are on a Wednesday hump day afternoon, and we're going to have some good discussion, hopefully on the bookkeeping essentials piece. And when I say discussion, I mean, please feel free to put any of your questions within the chat there. If I don't necessarily see it, feel free to, Jen, just to stop me at some point. And a lot of times it's easier just to speak to an issue right when it's fresh in everybody's mind. And I'm more than happy to do that as we go along through this as well. So as Jen said, Tyril Froese, I'm a partner here in the professional private enterprise in the Mississauga office. Born and raised on a farm in Manitoba, have two kids, 15-year-old daughter and 10-year-old son. And we also have a COVID puppy like a lot of people did this last year. So life is pretty exciting. And my wife is also a chartered accountant. So we said our kids are totally messed in terms of their sense of humor and all of that kind of fun stuff. So today, I do usually like to do this in person just because I get a feel for the audience and see the eye rolls and the groans at some of my really bad jokes. But I'll try to keep this light as well as we're going through this, as you know, bookkeeping, as much as I might find it riveting, some of you may be doing here just because it's a necessary evil for your business and your day-to-day. So what we're going to talk about today, we're going to look, and we're going to keep this at a relatively high level for all of these items. Each one of these topics, I mean, we could delve into and have an entire series on them. And certainly, you know, you may have questions as we go along. As I noted, please feel free to put those questions in the chat, and I'll be happy to answer as I can. We're going to look at the importance of bookkeeping. So why do we even care about bookkeeping, and why should you care about bookkeeping? I'm going to just briefly touch on what the difference is between bookkeeping and accounting. In some circumstances, the two words are kind of used interchangeably. And so we're just going to discuss, for the purposes of this, sort of what the difference is. We're going to look at the bookkeeping process. So where does it start? How does it look? And what do we do while we're going through it? We're going to look at sort of internal versus external bookkeeping. What's going to be right for you? What sort of bookkeeping software there is that's available, and what may be right for you as well as some of the filing requirements that you may or may not have. So we're going to jump right into this. And why do we even care about bookkeeping? Why is it important? I mean, the business is operating, everybody's getting their product, you're managing your bank account, and a lot of people, and for a lot of entrepreneurs, that is the key, and bookkeeping sort of gets overlooked. But why is it important? Well, we have to look at who's going to be using the bookkeeping and the records that you're doing through your bookkeeping. So I sort of break it out into two types of users. We have internal users and we have external users for the information that you're recording. Internal users can include management of the company. So in a lot of cases, as an entrepreneur, that's going to be yourself. You are the owner, the manager, the operator, the salesperson, the everything. And it's going to be yourself that's going to be looking at these books and records that are being produced. It could be your internal accountants or your external accountants as well. Accountants can sort of fit into both pieces of the pie, whether your business is large enough that you have your own internal accounting team, or whether it's your external accountants that are looking at the bookkeeping records in order to be assisting you in terms of your filings or anything else that you may need. And the owners. As I noted, it could be owner to management, could be one and the same people, but those are the people who are going to be using these records. And why do you care about these records? What's inside there? And I know this isn't an interactive session, but why do the owners care about this? Why would management care about this? How else is it that the management and owners can know about the performance of the company? As I noted earlier, the bank statement is quite often the place that the owners or management turn to right at the very start. Thanks, Everbella. That's absolutely to know what's happening and to know what is going on inside the business. Without this is your gauge in terms of how the company is performing, what balance is in your bank account. You know, a lot of people, as I noted, they start and they look at the bank account, but what about maybe those outstanding checks that are there? They're not recorded anywhere inside the bank statement, but it could get into a lot of trouble if you have a number of outstanding checks that are out there that aren't recorded anywhere through the bookkeeping process, and you're solely looking at your bank balance. It's a measuring stick of how the company is performing. There's also the external users. So these are people like the CRA, everybody's favorite organization, the Canada Revenue Agency. They're not one that you want to be on the wrong side of. Canada Revenue Agency cares about how your business is performing as well, because they want their piece of it. They want their income tax, the federal income tax. They want their HST. They want their payroll tax. The CRA is looking at the books and records, and they have to be accurate in order so that you're not paying too much to this outside agency. The bank may also want to see a copy of your records. If you've ever gone to the bank in order to get any sort of financing without any sort of records for the bank, you'll know how difficult that is, unless you're maybe signing some sort of personal guarantee or other piece. However, the bank is also going to want to see the performance of the company. And conversely, vendors and creditors also may want to see how the company is performing. If you're ever going to a supplier and you're looking to get any sort of credit with that supplier, they're going to want to see, and they may want to see some sort of financial results of the company in order to be able to judge whether or not they're going to be providing you with any sort of credit. So these are the users of the financial statements and why some of these users should care about the financial and the bookkeeping of the company. In terms of bookkeeping versus accounting, we sort of have, although I said they are sort of interchangeable, there is some key differences in between the two pieces. So the bookkeeping deals primarily with the data entry of financial transactions, while accounting is the summarizing of these financial transactions into the financial statements themselves. So whereas bookkeeping has sort of factual data, where you have invoices, you have a sale, you have a payment, you have some sort of a transaction, accounting quite often deals with estimates in addition to these factual data. So what I mean by estimates in the accounting piece is that you may have accounts receivable that you may not be expecting to collect from one of your customers for one reason or another. So that would be an estimate on an accounting piece. There's no actual factual data that's being hard recorded. This is just an estimate that this person isn't going to be paying their bill. Or like amortization, for example, on your depreciating assets. For recording this amortization, it's an estimate in terms of how much to depreciate on an annual basis. There's no transaction which has occurred. It's just an estimate, which would be part of the accounting process as opposed to the bookkeeping process. Something else to consider is that from a bookkeeping standpoint, quite often this data entry can be performed by individuals without any sort of formal training. Much like after this course here, anybody can go and record their bank transaction. So if you have a transaction that went through your bank, anybody can go and record that transaction and what it's for, and that however you're recording it and whatever system you're using to record it would be a form of bookkeeping. Whereas on the accounting piece, it does require some sort of knowledge of the accounting framework and the relevant laws. So if we are depreciating our assets, for example, again, we have to know what are sort of the allowable amounts that, say, CRA would require or that CRA would allow for the depreciation. And if you're writing off these amounts that are maybe uncollectible, what is allowed, what is able to write off from a tax perspective versus a non-tax perspective, all those different types of things require some knowledge of the laws and the applicable framework, whereas the data entry can be performed by somebody without any of that sort of formal knowledge. So those are the main differences when we're talking about bookkeeping versus accounting. So for the purposes of this session, we're going to be looking more at the bookkeeping piece of things. Jumping into the bookkeeping process. So this is sort of, again, this is coming at it from a high level, but in order to start the process, there has to be some sort of data origination. So as I noted earlier, the bookkeeping piece is recording some sort of a factual event or transaction which occurred. So that may start in a number of different places. So you may have from your POS, from your piece of something, or no, sorry, your point of sale system. Just joking. Again, one of those bad, trying to keep it a little bit light. So from your point of sale system. So if you do have a point of sale system, it may be your cash register, it may be your Monera system, it may be any other sort of system that you use for your point of sale that you're creating. And that may be where the data starts. You create a sale and your system spits out a receipt that says, here's the sale which occurred. Thanks, Oliver. I appreciate the laugh. And so that may be where this data originates from. And when you have that piece of information, that's where you would start the recording process. So you have a sale that is created, and it may be either whether it's from a credit card, it may be cash, it may be a direct transfer or an e-transfer, it may be any of those different types of pieces, but the transaction actually occurred. And this is where you would record that transaction, or where the start of the transaction occurs. You may have a purchase order. So if you've created a purchase order, that may be the start of the transaction. Or for some people, it may even be from the bank statement. It's not necessarily the case where you're going to have a sophisticated system like a point of sale system. It may be at the end of the week or at the end of the month that you actually go down, sit down and look at your bank statement. And that is where the data originates from. And you record all of the transactions which happened through your bank statement. And that's where it has to get classified. So when you're writing out these transactions that have occurred, and it may be, and we'll talk a little bit later about the system that you use, it may be as simple and as old school as in a ledger book. Or if you're moving up a little bit up the step, it may be an Excel spreadsheet that you have. It may be that you have an actual system. And I'll talk a little bit more about that in a little while. But this is where it has to get classified. So you have two main places where this transaction can be classified to, two key different statements that it can go to, one being the balance sheet and the other being your income statement. So let's kind of talk about those for a little bit. So if it's an income or an expense item, everybody can kind of pick those up. You create a sale, that's on your income statement. You pay an expense, that goes onto your income statement. But what is maybe that expense item? What if you're going to, let's say you're popping into a Home Depot and you're picking up an air conditioner module to add to your office space or into your store, or you're getting somebody over, you're getting new flooring put into your office or your showroom or into your place of business. What might those items be? So those are a little bit more tricky. And it could be that, at the end of the year, you need to consult with your accountant or your person who's doing your taxes in terms of whether or not these items are indeed an expense or whether they need to be capitalized as an asset, as part of your building or as part of, say, your vehicle. What happens if you're putting on a new truck box onto your service vehicle that has the toolboxes on the side of it? Is that capital in nature, or is that an item that you can expense? Both of those have very different tax implications, one which you can depreciate, one which is a direct write-off against your income. And it may be beneficial in either scenario to have it on either case. And so it's not always click and dry in terms of where this needs to be recorded in, but in any of those items that, that you're unsure of, I always say to my clients, feel free to have a column that just says, ask my accountant. And I know QuickBooks, if you're using QuickBooks, they even have a dedicated account that says, ask my accountant. And I'd much rather see items inside there where we can maybe, be helpful in terms of what's the best way of using a transaction that occurred, as opposed to having it just thrown in somewhere and not maybe necessarily having it stand out and then missing out on some opportunity with which we can write it off for tax purposes, or maybe make your balance sheet look better if you're going for financing or to vendors or creditors. So the classification of these transactions is very important. And again, I always say, if you're unsure of it, please just ask at the end of the year or shoot an email to your accountant. I'm saying that now. I don't mind getting emails, maybe yours does, but just shoot an email off and just ask about these transactions that occur. So the important piece is that any of the transactions which hit your bank account must be recorded in some way, shape, or form. So that's the important piece. Now, if you're a sole proprietor, you might be saying, well, any of these transactions, they don't impact my business, so why am I reporting these? It's important, and I strongly suggest getting a separate bank account for your business to operate with. It's much easier when you're going through your record keeping and your bookkeeping if all of the transactions in your account that you've dedicated for your business are business related. In that way, when you're looking at it, and I know, real life gets in the way a lot of times, and sometimes it's a week or at the end of the month. Sometimes it may even be at the end of the quarter when you're looking through your bank statement. And if you're using your personal bank statement that you used to go out and buy groceries with or buy the kids gifts with or any of those items, it's really difficult at the end of the period when you're going through the bank statement, if that's your point of data origination, to decipher between what might be business related that you're allowed to write off and what might be personal in nature. So really important to get that business bank account so that all transactions that are going through that bank statement are all business in nature. And in that way, that your bank has to balance at the end. And what I mean by that is that when you're doing your bookkeeping process and doing your data recording, that every single transaction that's gone through that bank account has to be placed somewhere. And at the end, if you've missed something or not by if your bank doesn't balance. So really important for that. I also recommend if you're using credit card to do the same thing for that as well. Get a business credit card and so that that all the transactions which run through there are business related. Now, of course, as I noted, if you're a sole proprietor as opposed to a corporation, all of that money, regardless of whether you're using a personal bank account or not, your income tax is based solely on your sales and your expenses related to the business, regardless of whether you're using that money for personal or not. However, it just makes from a record keeping and a bookkeeping standpoint much simpler if we do it in that way. And also when CRA comes, if they ever come for an audit, then you have all the records in the bank statements that you can show to them, and it's all business related expenses on there, and it just makes it a cleaner process. So then we get to the actual recording of these transactions. And like I said, it can be as simple as a ledger book. So, and I might be dating myself with that. However, I still have probably one or two clients who still every year come in with their, 13-line ledger book, and which is quite fine. If your business isn't a business where you have a ton of transactions on a regular ongoing basis, and it's a lot fewer transactions, that may be all that you need in order to actually record the transactions. If you have maybe a little bit more transactions that you want to record, but still don't want to run through a accounting software, Excel is also just fine in terms of recording it. If you are a little bit more, have a few more transactions that require, invoices, that require purchase orders, that, you may want to have more ability to run reports and to have a look at things on a regular ongoing basis, then an accounting software, whether you're using internal or external bookkeepers, that may be how you're going to be recording this. It's just important that everything does get recorded in some place. Like I said, it's really hard at the end of 3 months or at the end of half a year, if that's been put to the side, to go back through all of your bank statements or even through your invoices. We know the abbreviations that are on a lot of invoices, and be able to decipher what a lot of the expense may have been or what the transaction may have been. It may be that you've sent an e-transfer somewhere to somebody for some job that they perform, and all of that's showing up on your bank statement is just strictly e-transfer. And so it's really difficult, the longer that you are separated from the actual transaction occurring, to be able to accurately classify and record those items. And so I always suggest that you take some time, and if not on a daily basis, that at least weekly, that you can go through this. And again, that does depend on the number of transactions that you have. It may be that you have, 2 or 3 transactions on a monthly basis, in which case, obviously, that's not going to be required, and you can do that quarterly or whenever your filings are due, which we'll talk about later as well. But just do it on a regular, ongoing basis. Set aside some time and actually dedicate that time to doing your record keeping. It's very important. I know, even for hitting the gym, I know you can't see the full body, but if you could, you'll know that I definitely don't dedicate enough time to putting aside to go to the gym. But it's one of those things that if you don't actually set aside the time to do it, it's way too easy just to get put by the wayside. And especially if your business is new or just starting out, where you have so many different things that are pulling you in all different directions, it's easy to leave the accounting and the bookkeeping piece to the end and just say, oh, I'll deal with this later. I'll deal with this later. So it is important to get on to that. So for the record keeping, we'll look a little bit more as well at the what that means on the next slide as well. But then we also have the filing. So just as important as recording everything down is your filing of this. So there's a number of different ways that you can file away your invoices or your receipts or your expenses, but have it done in some sort of a systematic method. So whether it be that, if you have a few different vendors that you may want to just file it on a monthly basis so that you have a January folder, a February folder, March folder, and that, so that your bank statement, when you put it in with that folder, that it ties in. So every single transaction that is on that bank statement has some sort of a piece of backup that goes along with those transactions on that bank statement. And again, this can also be digital still. Of course, we all get our bank statements electronically. So what you can do, just take a PDF copy of that. Take a PDF copy as well of your receipts or your invoices. I know the question often comes up, and is that allowed by CRA? And CRA does allow for digital copies of the receipts or invoices. The only thing that they don't allow is just strictly a Visa statement or a bank statement. If you're claiming an expense as a deduction for your tax purposes or for HST, they require that you do have an actual invoice to go along with that. So in whatever sort of system that you use, do it systematically so that it makes sense to you, so that if CRA, and again, the biggest part is for CRA, but what if you're looking back and somebody is sending you a request for payment for something that you've already paid? And it happens all the time. Payments get applied against, say, a wrong account somewhere, and maybe one of your vendors is requesting payment for something that you've already paid. Well, if it's going to take you all day, or you haven't filed away somewhere, the fact that you've made that payment and you've stamped paid on the invoice and the date that it was paid, and you can go and vouch that to your bank statement showing that it was paid, it may be that you're overpaying for something, because if you can't prove it, well, now maybe you've got a bad relationship with that vendor because they don't think you've paid, and it can cause problems in that way. So it's not just for CRA audit purposes. Having a systematic filing record is important even for your own internal purposes, so that you're not maybe overpaying, or conversely, not collecting from a customer. If a customer comes in and you don't have an accurate record of the sale that was made and the payment, or if they haven't made a payment and you don't have an accurate record of that, you may be missing out on a lot of cash flow as well in running your business. And you may find that all of a sudden cash flow is tight and you're saying, well, wait a minute, why is cash flow tight? I've made all of these sales. I know I've made these sales. Why don't I have the cash for it? And without having the accurate records kept and filed away in a systematic place where you're able to determine where it was, you may be missing out on that. So filing is equally important. And, some people are more natural in terms of their organizational skills. My wife always says that it's a good thing she's around so that we have somebody in the house that's well and organized. But in terms of it, just being systematic so that you yourself can go through and know where everything is and where it's recorded properly. Like I said, monthly basis folder is fine if you have fewer transactions or fewer vendors that you're dealing with. It may be as well that on a regular basis, that if you've got, say, repairs and maintenance versus meals and entertainment versus all sorts of different types of expenses, you may want to also separate it out by the different classifications as well, if there's going to be a lot of transactions in those. So the question is does CRA accept text message receipts for payment, such as automatic payment of cell phone? So long as that is the invoice method for the cell phone provider, then they would accept that. So not just a proof of payment, but it has to be the actual invoice from the provider themselves in order for it to be accepted. So, most vendors will provide an email invoice or just even an online invoice, but it has to be whatever the vendor is using for their invoicing system, so for CRA to be able to accept that. Good question. So talked a little bit about sort of who's going to be doing this bookkeeping. Everybody, especially entrepreneurs, small business, where it may be really difficult to have somebody inside the organization who's doing that, or the time for the owner, manager, salesperson, the jack of all trades just doesn't have time, or doesn't have the time set aside in order to do the internal bookkeeping. So it can really be one of two things. You can have your own internal in-house, and again, does this position require somebody that's full-time, or does it require somebody who's maybe comes in once a week to do the record keeping or bookkeeping? You may have a front desk person who is also able to do these bookkeeping transactions. So as noted in, that it doesn't have to be somebody who is well-versed or an accountant in order to be recording these transactions. So you may have a front desk person who's answering phones and accepting, your customers that are coming in that aren't necessarily busy all the time, that if you trust them in order to do that, that they can be doing all of the recording of the transactions. You can be providing them with your receipts, or forwarding on the emailed receipts, or doing the invoices or bank statements, or however your data origination is, they can be provided with that and then can be recording these transactions in your system. So a lot of times for a lot of small businesses, that's what we see, is that, it is that front desk person or somebody else that's trusted within the organization that you can have with which to be recording those transactions. It can also be, somebody who is part-time. It doesn't have to be that you have somebody hired on a full-time basis and who's going to be doing your bookkeeping at all times. It may be, and there's a lot of organizations out there that have part-time bookkeepers for hire, or a lot of people that are part-time bookkeepers. I have a lot of clients who use part-time bookkeepers that go from client to client, and they just do the data recording for those clients, and that's perfectly fine. The thing with an in-house is then, what type of record keeping are you going to be using? So a lot of times with those internal bookkeepers, they're going to be using some form of software that they'll require you to have. And so then it's the onus is then on the business owner in order to get that software for the bookkeeper to be able to use, so that you house your data and you own your own information. If you're going to be looking external, there's many different places that you can go for this as well, and lots of benefits and potential downfalls for it. So one of them being system integration. So if you're using an external accountant, the important thing to think about is, does their accounting system that they're going to be using integrate well with my internal system? It may be very simple, your internal system, and you just have bank statements that you, again, are your data origination, in which case a lot of the accounting software that is out there right now does have direct bank feeds. And so your internal system, which just is your bank statements at this point, would feed directly into your external provider's system directly, or your point of sale system may feed directly into the accounting software that your external service provider uses. That's something important that in order to make life easier from your side, and also less costly, if your external provider is spending a ton of time on there, they're also going to want to get paid for that. And so you want to make sure that your systems integrate together. You may also get access to specialized services and your accounting integration. So with if you have an external service provider, 9 times out of 10, they should have taken a lot of training in terms of the bookkeeping. and in order to be able to provide good service to the clients that they do have. And so they may be able to make some suggestions as well and get access, and you get access to specialized services and your accounting integration. So for example, when we do our E's, as Jen said, so I head up our outsourced bookkeeping service line. And so our outsourced bookkeeping line feeds directly to the service provider, the partner who's in charge of the account, and they're able to then offer advice in real time to clients as well, as we might see something happening. So if there's margins that are slipping, if there's different KPIs that we're looking at that that could help the client in terms of how they're operating their day-to-day business and be more successful, then it's real nice to be able to have that immediate feedback as opposed to waiting for that year-end meeting when it might occur. It really depends on what's going to be right for you in terms of a cost benefit and in terms of how you're going to be using your record keeping. Again, if it's not somewhere where you have a lot of control over the margins, say, or over the transactions, it may not be as beneficial for you to have real-time data. I know for a lot of the professionals, we just do annual or semi-annual bookkeeping for them. And so what it means is that, for a doctor, they're not necessarily able to change their practice or run their practice differently, unless you're, say, running a clinic or looking at those types of different metrics, where having regular ongoing records are going to be of much benefit to them in order to change their operations. They get paid from OHIP or whichever service provider or the insurance provider that they get paid from, and they don't have the ability to control the differences in how they're going to be billing their business. There may be other pieces that we're able to help with, but it's not necessarily as beneficial for them as opposed to somebody who's maybe doing day-to-day jobs and have different product lines that we're able to look at where they should be maximizing their profits from. So as mentioned, if you're going to be using bookkeeping software, there are different types of software that you could be looking at. I noted, obviously Excel, if you're going to be bumping up the next level above that, there's many different options and items out there. And I just listed a few of the very, common ones that are out there. You have off-the-shelf software. So Quickbooks, of course, being probably one of the most common software or accounting software platforms that are out there. Xero is another one that's quite often used. Sage, so this one used to be Simply Accounting, but they're now Sage Intact. So there's many different types of bookkeeping software that are out there and available. My suggestion is to stick with some of the more well-known ones. The support and the online training and tutorials for these software is really good in terms of being able to use it and not getting too much trouble in recording things in the wrong place or the wrong fashion. They're very intuitive software. They will help you with the guides and tips in terms of being able to record things and have things accurately recorded. They do have a lot of scalability as well. QuickBooks, Xero, Sage, they all have a lot of plugins which you can use as your business continues to grow, whether that be, whether you have employees and you need to be doing payroll and T4s and doing their pay stubs, or whether you have large inventory that you need to be recording and have all of your purchase orders and have your, overseas or on the water inventory recorded as opposed to items that are in warehouse or on consignment. There's a lot of very, very good plugins that these big names have that you can really scale to your business. They do offer as well a cloud-based system, which I strongly encourage getting as well. With a cloud-based system, you're not worried about your data going down, becoming corrupted, or having your hard drive go down on your computer. Of course, we always recommend if you're doing that you have it backed up as well. But having cloud-based, I've had way too many clients in the past that have come to year end and just say, you know what, Ty, we're going to have to go back and re-go through this year's worth of transactions because our computer crashed and we didn't record it or we didn't back it up like you told us to. And so just having a cloud-based makes it simple from that regard. in addition to being able to give your business advisor access to it also in real time. So whoever it is that's your business advisor, they're then able to see the data that you've entered in real time, and you can then get the advice that you may need in terms of them saying, hey, have a look at this. Why is it that my cash is so low? And they may say, well, you're not collecting your receivables fast enough, or your inventory balance is way higher than what it needs to be in terms, and you're not turning over your different inventory products. So that's a couple of the benefits. So like I said, I suggest going cloud-based in that fashion, but certainly not saying that you can't also have a desktop version of any of these software. There's very customized software as well, and industry-specific software. So if you're into, let's say you're into farming, you may need Ag Expert. Or if you're into project management, maybe Deltek Vision is something that you get into. Or if you have a very large corporation, Great Plains or Oracle. But we won't go into detail on any of those types of products, as those are typically the companies of size that need those types of products have a very strong internal accounting team in place already at this point as well. But needless to say, there's a lot of options out there that are available. And always, like I said, feel free to reach out and ask if you ever have any questions on any of those software and what might be right for your business. So one of the big pieces and one of the things that we talked about earlier as well in terms of the importance of bookkeeping is your filing requirements. So a big part that drives a lot of people, and which ultimately forces a lot of people to do their bookkeeping and record keeping, is when they have filing requirements. So what are some things that you as a new business may need to look at in terms of what your filing requirements are? So we have payroll filing requirements, and this is a big one. So if you have an employee, and you're paying a salary or a wage or commissions, there are filing requirements that you need to have. And so in order to meet those filing requirements, you need to have recorded your payments. You need to have your CPP, your EI, your federal tax, any sort of those deductions, they all need to be recorded, and they need to be remitted in a timely fashion to CRA as well. HST is the big one. So any business that has over $30,000 in sales is required to register for HST. Now, depending on the size of your company, you may only need to file on an annual basis. However, what I do suggest is doing it at minimum on a quarterly basis. And again, nothing other than requiring you to at least sit down each quarter to do your bookkeeping and your record keeping. So HST, and an important piece to note as well is, even though you may not have those 30,000 in sales, you may want to voluntarily register for HST, just because if you're having a lot of startup expenses, or if your expenses are higher than what your sales are at the very start, and you may want to be able to collect those tax credits back on the payment of your expenses. And you can do that prior to hitting that $30,000 as well. So it may be beneficial for you to register even before you hit the threshold where you're required to register for HST. But again, HST requires that you have accurate record keeping in order to make sure that you have your tax collected as well as your tax paid properly reported, to make sure that you're getting all of the money back that's due and owed to you. Corporate taxes, a fairly obvious one, and not just corporate taxes, but also personal taxes. So if your business is a proprietorship, it's important that you have all of your expenses put down, because unless you enjoy paying more taxes than are necessary, that may be, and all the power to you. I have yet to meet any single client of mine that has said that. However, if you're out there, certainly happy to meet you. So we definitely want to make sure that that the government is getting their fair share. Otherwise, at the end of the day, if it's not filed and they do an audit, it may be that there are interest and penalties which are due. So it's important to have the accurate record keeping. And I see the questions coming in. I'll talk to them briefly as we're done the slide here as well. Employee health tax being another one of these as well. Banking requirements. So if you have any sort of financing that requires financial statements from the bank, they require that a lot of times, that either 90 days or 120 days after your year end, that you provide them with a financial statement. And then OSC filings, I mean, that's if you're dealing with the Securities Commission, and it may be, just as somebody noted in terms of the trust account, that there may be other regulatory filing requirements that you have as well. So it's very important in terms of having accurate filing requirements, so that that you're not incurring any sort of interest and penalties by not having accurate records or just strictly overpaying. So the question came in is that in the immigration services, we have to have a trust account, a client account, and a general account, operating account. How do you manage that in terms of the bookkeeping? So anytime where you're required to have a sort of a reconciliation, so I know the trust accounts where you have to provide record and have a reconciliation of the trust account, I would have a separate set of books for that trust account, just to be able to record any of the transactions so that it matches up with what's in that trust account. Now, QuickBooks or a lot of software allows you to have multiple entities within the one instance of QuickBooks, or different divisions even, so that you can separate it. And so you can have your bookkeeping and record keeping for that separate trust account separate from the operating account. And that way, money that transfers in between the two can be recorded as a flow through, and you can see the money that's entering or exiting the trust account for those record statements. Another question, does HST registration need to be done before buying all materials, or can it just be done before the tax year is through? So that's a really good question as well. And a lot of times, we see it where a new business comes in and it's at the end of the year and they say, well, I had all of this stuff that I bought. Am I able to go back now and claim it? Well, unless you have, you can go back to the beginning of the month which you are in, or if you have taxable sales, you're allowed to go back to the period when your taxable sales started. Otherwise, they don't allow for the backdating of HST registration. So you can, if you had taxable sales that go along with that month, then you can go back and register for HST at that point. However, if you did not, they won't allow for the backdating of the HST registration. Next question. And sorry, we're sort of getting into the questions. Watch this. There we go. I might as well flip this ahead so that we're straight into the piece here. So I recently started paying my rent via etransfer. Do I need a receipt for this? Okay, or is it okay as it shows on the bank statement who it went to? No, you will need a receipt for this. CRA does not accept bank statements as a method of proof of transaction. So they require either an invoice or a statement from the vendor that you're paying for that. So bank statements, and again, we have seen audits go through with that. It is a little bit at it. If you get an auditor who is accepting of that, it's certainly not something that they have to do, and they do require that, or they can just straight out deny it. Some questions that are in the question and answer panel. Okay, I will walk through the text here, and then maybe Jen, I'll get you to ask the questions from the Q&A panel.
For sure, for sure.
So I've incorporated my company this year in the month of January, and I got my HST number in this month. Fantastic. As I'm under 30K, it's mandatory to charge tax to my customers, even I have HST number. Yes. So if you have an HST number, if you have registered for an HST number, yes, you do need to charge your clients for HST then on the applicable sales. So as a startup, the construction expenses that were generated in the meantime of obtaining, can they be used? So again, as long as you have your HST number, any of the expenses, so your construction expenses that were generated, if they were generated after you got your HST number, you can certainly use those prior to having any sort of sales. But the important piece is that you were registered for HST in the period in which the expenses were incurred that you're claiming with it. Which is why I always tell somebody, if they're starting up a company and they're going to have startup expenses, certainly register for HST right at the very start, so that you're able to get those tax credits on the HST that you paid before you're even required to start collecting it on sales, which may be a long time down in the future, depending on the type of business that you're started up. I did see one other question here. Does HST filing need to be done every quarter? So that really depends on your filing requirements when you register for HST. So there are certain sales thresholds that will require you to file on a certain time basis. And I can't offhand remember what the exact thresholds are. If it's 500,000 or $1 million in sales, then it drops you to the quarterly basis. I know just at the 30,000 threshold, you're allowed to choose whether it be annual, quarterly, or monthly. I always say, you know what, at a minimum, do it quarterly. Monthly may be too onerous for you when you're starting up in terms of the administration for having to get it filed. However, on a quarterly basis, certainly you can choose that until such time as when your sales are high enough, or if they do get high enough that you're required to file on a monthly basis. So when you register, you get to choose what your filing basis is based on what your sales amounts are going to be, or estimated sales amounts are.
Thank you, Ty. Just to get to some of the questions in the Q&A panel, a question came in earlier on, can a simple record on a bank statement count as a form of bookkeeping reporting?
It can. If you have written beside the transaction, and I used to see this a lot more than I do anymore now that bank statements are mainly online. I used to see it where the client would write beside on the transaction, on the bank statement, what that transaction was for. And certainly, much like just a manual ledger where you're reporting that item, that certainly is one way of record keeping and keeping track of that. What I would suggest is that you keep the backup that goes along with those transactions still together with that bank statement when you're filing, so that you have copies of what it was along with the bank statement if you're ever going back to those records for whatever reason it is that are needed, like we discussed.
Great. Another question came in about setting up a separate bank account. Should it be linked to your business, or can it be a separate personal account? My bank offers a business account, but I'm not sure of the difference, and if I need to do the personal versus business account as my separate.
So certainly if you're a proprietorship, it's going to be still under your personal name, or it could be under your business operating name. Just the key piece is that account is a separate account from your main personal account, and it's used for all of your business transactions. So if you have, whether it be a sale, an expense, an asset which is purchased exclusively for the business, that any of those items are paid for or come out of that business account. Now, it may be that when your business starts up that you have expenses that are being incurred and you haven't had any revenue yet with which to put into the bank statement. What I suggest in those cases is that you do a transfer from your personal over to that business account, in which case you again have a record of that transaction and that it's a personal transaction. And then you can start using those funds with which to do all of your expense payments prior to having any sales. And then if it's a proprietorship, you can, of course, flow money back and forth without having any sort of tax implications to that. If it's a corporation, that corporate bank account, anytime, of course, money flows out from that corporate bank account to your personal account, there are going to be implications to that. So make sure you're talking to your accountant or your tax advisor prior to having any flow in or out. So different things to consider, but certainly having a separate account, whether it be under your personal name or tied to that business, is the important piece in there from a bookkeeping, record keeping standpoint.
Great, thank you. I know you talked a little bit about some of the different bookkeeping software. One of the questions is, do you have any recommendations for bookkeeping software for a manufacturing business with online and in-person sales?
That is a good question. So manufacturing certainly does take a little bit of specialty accounting or bookkeeping, record keeping into consideration, especially when you have products that are in process throughout the different sort of manufacturing process. When you're adding different inputs to that, or whether you're allocating overhead to it, well, I guess that the overhead allocation is more of the accounting piece at the end. However, when you're adding separate pieces into a manufactured product, a software that could be used that, you can still use, say, QuickBooks or Xero, and have an add-on, let's say like Fishbowl in a case like that. Something certainly to consider. They're a more robust inventory management system, which can handle more of, say, the manufacturing piece of it, so that as products are created, that your inventory management is really key in terms of your sort of record keeping, bookkeeping. Off the top of my head, not any specialized software that I can think of at the moment, other than having an add-on like that into QuickBooks or Xero. But yeah, certainly something that we can take offline and discuss later too.
Great. Does CRA require we keep receipts? Obviously, yes, we talked about that. I put my business expenses on a credit card so I don't have to keep receipts. Is there a way that I can reproduce receipts through the Visa company later on?
Unless, I haven't heard of it. Because Visa would have to go back to the individual vendor in which the payment was made to in order to reproduce those receipts. So not that I'm aware of that you could get that back. And again, CRA, if you look at what their requirements are, a Visa statement or a bank statement are not on their list of satisfactory items in order to substantiate the expense that was paid in the event of an audit. So hang on to those receipts, again, whether it be in digital form, whether you're taking a picture of them and filing them, scanning them in and filing them, you still need to have copies of those invoices.
Great. There's another question I saw here. There's some duplicates that we've answered. Is paying a customer by check or e-transfer considered the same? We want to avoid printing checks and send e-transfers instead. The same applies for receiving payment. Is check the same as e-transfer?
Absolutely. Any form of payment or accepting payment is certainly fine. What I do recommend is not doing it through cash, as there is no sort of data origination when you're using cash. So it's very difficult if you're purchasing something from a vendor, say, for example, if you're paying for it with cash, there is no record of that other than that actual invoice, making sure that you're keeping that invoice again. But there's no other record of that transaction, where the cash came from, which account it was from, or how that was sort of used. So there are going to be circumstances where you use cash, which is perfectly fine. However, just from a record keeping, bookkeeping standpoint, what I suggest is making sure that you sort of have a petty cash accounts that can be replenished, and that it gets reconciled with the invoices for which the cash is used for on a regular basis if you're using cash. And same thing for accepting cash payments. Of course, you're not going to turn down any form of payment from a customer if you're buying something or you're creating a sale. So certainly you can accept the cash, but once again, it's important then that you have that deposit slip, or you have that record of that transaction, that sales receipt, or that piece that's going to be your data origination, because cash does not create that.
Fabulous. Another question here. Would you recommend online QuickBooks, like the cloud-based, or the desktop version?
So certainly there are some differences between online and desktop version. Online is a little bit tamed down in terms of its functionality, which is more so from a accounting perspective as opposed to from a bookkeeping, record keeping perspective. So for example, I went in to fix or adjust a CPP amount in a payroll account that was picked up just incorrectly for a client, and it didn't have the capability of doing a general ledger journal entry into one of those specific tax accounts. So certain pieces of the higher level functionality, I'll say, is missing if you're on the online version of it. However, there's for 99% of any sort of your transaction needs, the online version is certainly going to be sufficient, and is going to offer you, again, a lot of those various different plugins, as well as, giving your business advisor access to real-time data that they can assist you with, and also having your record keeper or your bookkeeper, whether that be internal or external, have the capability of them logging in and recording transactions in real time as well. So if you're at that restaurant, and you have that bill, you take a picture of it and you upload it into your system and have it automatically, online, versus, needing to either VPN in or be physically at your desk in order to do the record keeping if it's on a desktop version of it. So certainly differences in between the two, but I would say for the majority that the online version would be sufficient for sure.
Interesting. Someone just put in the chat that the online option of QuickBooks doesn't have a lot of the advanced options.
Yes.
And it looks like Sean recently switched and is regretting it.
Yeah, like I said, it's a lot of that higher level functionality, which, those advanced options aren't there on the online version of it. There's also the question in the chat, and just looking here, just start a business and not received my first payment, but I have charged HST on invoices as asked by my client. I won't be reaching the 30 grand mark this year. Can I still charge HST? No. If you are charging HST, you are required to remit that HST to CRA. So there is a non-registered remitter that you can file as well, but any amount that you're collecting in terms of HST has to be remitted to CRA. So that's something you definitely want to talk to somebody about as well.
Looks like there's another question. I've been approved by various suppliers for credit. I'm happily nearing a point where our sales allow us to pay invoices immediately as opposed to using the terms. Does it make financial sense to still take advantage of those terms, in effect an interest-free loan for a month, or should we pay them off immediately?
So there's a good advisory type question. And there's going to be no right or wrong answer for this. I have a lot of people, it's like the age old question, should I buy RRSPs or not? Or, should I buy this vehicle as opposed to leasing this vehicle? And there's a lot of questions where the answer is very specific to your circumstance. And so in terms of generalities, using any time where you're able to get interest-free financing is always a benefit. And if you're able to use that cash in growing your business in other ways, then certainly you want to be extending your payment terms, so long as you're able to still pay them and there's not any sort of cost that's associated with it. Then you want to be, using up those terms. However, without knowing the specifics of the business, I don't want to say one way or another to go through that and do that. But like anytime where you're able to use interest-free financing, it's certainly a benefit, because you now have that cash freed up with which you can theoretically and hopefully be growing your business in other ways and using that cash for. So
awesome. I do want to be mindful of your time, Ty. There are two, looks like they're pretty quick questions to answer, so hopefully we can spend the time to answer it.
Sure.
Attaching scanned receipts to QuickBooks, is that the same as keeping the physical receipt? And I guess my second part to that question is photos of receipts. Are those allowable?
Absolutely. So short answer to that, yes, it certainly is. For our outsourced bookkeeping, what we do is we have a program. It's called Dext, D-E-X-T, and it feeds directly into QuickBooks or Xero. And how it works is that it allows the client to take a picture or take a PDF that's within an email, or even if an invoice is within the body or the text of an email, you forward that on to Dext, and it then takes a picture of that, and it's able to using OCR, it just pulls out the relevant pieces, the HST classification of it, all that type of stuff, and feeds it directly into QuickBooks. And it is then really easy, and it's attached into QuickBooks. The client then does not have to keep that invoice. It is in Dext, it's within the system, and that we've gone through, obviously we've gone through audits with CRA with that, and that does suffice for their record keeping. It's a copy of the original invoice.
Perfect. And last question, is a copy of the cashed out check from the bank the same as a receipt? Example, I paid my rent with a check. So is this check, can it be used as a receipt?
You're going to want to still have a receipt from your landlord in that case. Again, a reasonable CRA auditor will look at these cashed rent checks, and that hopefully that they see to it that it's not just going to an individual and it's a legitimate expense. However, there's no requirement for them to do so, and only a receipt will suffice as according to them. So
fantastic. Well, it looks like we got through everyone's questions, which is fantastic. So thank you so much, Ty. And just as a follow-up, we will be emailing everybody so that you have the contact information for the Mississauga Business Entrepreneur Center, as well as the Brampton Entrepreneur Center. And just a friendly reminder that we do have another webinar next week as part of our Entrepreneurs Connect series with MNP and Mississauga. It's on incorporating your business, talking more about the how incorporating can lower your risk and optimize tax benefits. So this will be another great session for any of you that are thinking about incorporating your business, to provide some insight as to how incorporating can help lower risk and optimize those tax benefits. So we hope and look forward to seeing you next week and for the future sessions. And John, I don't know if you want to add anything.
That's everything. Thank you all for coming.
Yeah, thank you again. Thank you, MNP. Thank you, Ty. And hopefully we'll see you next week.
Thanks
Thanks,
everybody.
everyone. Have a great day.